Good afternoon, everyone, and welcome to MIDF Conversations. It's our version of an intellectual keto lunch. No carbs, no starch, just all of the good stuff. So welcome, everyone, and thank you for being here today. We have an amazing guest. We have Jalil Rasheed here as our guest for this afternoon. Jalil is not yet 40, and was appointed to the board of Berjaya on the 16th of March. And in April, the first week of April, when Berjaya Corp announced that Tanjivin was stepping down as executive chairman, and said that Jalil bin Abdul Rashid has been mandated to transform the Berjaya Corp Group into a high-performing organization through streamlining the various group businesses to create and enhance shareholders' value, optimizing financial and human resources, improving synergies and efficiency, as well as enhancing corporate governance and transparency. Indeed, in his statement, Tanjivin went on to say, it is also important to give Jalil space and freedom to run Berjaya in his own style. Now, a great vote of confidence from one of Malaysia's most famous businessmen. Welcome, Jalil, and thank you for coming onto the show, and happy birthday.
Thank you. Thank you very much. Thank you for inviting me. It's great to be your second speaker, and I've enjoyed the series so far, so I'm delighted to spend the next 1 hour.
Brilliant. Okay, so let's go straight down to business. Berjaya Corp is huge. I mean, it really is huge. I didn't realize how huge it was until I started looking at it carefully in preparation for this. I mean, it does everything from selling Rolls Royces in London to luxury hotels to Japan to Starbucks and carrying pharmacy and everything really, and gaming as well. So it does everything. Yeah. So how do you come to grips running a gigantic organization like that, and what are your plans?
Yeah, so I think the transition of having been a fund manager somewhat helped, because I spent my last 17 years looking at companies and just trying to dissect companies and seeing what worked, what doesn't work. Before I took on this job, I spent about 8 months with Tanjivin, working as his advisor and going through the businesses. So getting into this job in March wasn't a surprise. I was quite well aware of what the businesses were, and I knew what we needed to cut and what we needed to streamline. But it was very clear to me that within the first few months that we are essentially a consumer company, and that is where about 90% of our revenue is coming from. Very consumer-focused businesses. On my first day, just about 4 months from ago, I went around saying hello to everybody, on my first day, and I asked some of them, what does Berjaya mean to you? And that was a question that was very difficult to answer, because a lot of people had difficulties pinpointing what was actually Berjaya. Are we a distribution company? Are we automobile? Are we industrial? And that's when I knew that as we crafted a strategic plan, we needed to define the group better. And that's why about a month ago, when we came up with the plan, I wanted it to be defined as a consumer group, and secondly, to come up with the clear verticals of what we wanted to do, which was retail, food, hospitality, real estate, and services. Because we needed to kind of pin down, we needed to anchor down what is it exactly that we are comfortable doing, and also a reflection point. What is it exactly that we are good at? We just can't be claiming to be good at everything. And that's how we came up with these 5 verticals. And from then on, it was a discovery exercise about what are the companies within those verticals that we would like to either improve, enhance, or grow even further, and then work on divesting those that don't make the 5 verticals. So it's been enjoyable. It's also been very challenging because, as what you correctly pointed out, is quite eclectic from a geographical perspective as well as from a sector perspective. Some companies need the hand-holding. Some companies are quite self-sufficient. So it also requires a very different management style to be adaptable to all the companies that we have.
I know it's still amazing because Tanjivin is one of the one of the most famous businessmen in Malaysia.
Yeah.
And he went around collecting all these assets, and they're each of them are amazing assets, and he really has quite well invested well. And how do you tell someone like that actually this is very nice, but it's not suitable for Berjaya going forward? Was that a hard conversation?
So I think in my first 8 months before I took on this job, I told him, look, you've got to stop acquiring assets, right? And you've got to it's a period of consolidation. And when I took on the job, I also told the board that it's a period of consolidation, that we needed to really kind of slim the group down and be very, very good at the few things that we do, rather than trying to be good at everything. Because in the past, we were scraping the surface and not really going down and making things much better. The common criticism has always been that you've got amazing assets that could be worth 10 times more than what it is today. Why isn't it? And it's not being reflected in the share price as well, for obvious reasons. Tanjivin always tells me that he's an entrepreneur and not really a manager. So he goes by gut instinct, and he has a great nose for good deals and brings it in. And then I think then comes the bigger question about what do you do once it's already in the group? How do you run it? How do you make sure that you give the companies independence, but also have oversight at the top? And that's the manager aspect of me coming in. So in a way, I get this question, a lot of people asking, how is it a working relationship between you two, yin and yang? And I think it is yin and yang, and I think it's quite complementary. He brings that entrepreneurial awareness and ability to kind of bring those deals, but we do have an agreement that he will run through everything with me first, and he told me the other day, I want to buy a lot of things and you don't allow me to, so I said, let's sell it first before we buy anything new. So I think it's a good balance. And I think also this pandemic, more than anything, has opened up, has made us realize that we do need to be very focused, right? Case in point is our hospitality division. It's like everyone else, it's been decimated over the last 18 months. It's a division that pre-COVID brought about 150 million ringgit of revenue for us. It's been zero rise right now. Wow. And we do need to keep on pumping money in every single month to keep the hospitality division going, because there's an element of fixed cost. And that's when I think the big awareness of how large the group is and the need for us to slim down and focus on really what we want to do. So I do tell Tanjivin that we're not going to do any more deals, and we're just going to focus really on selling. He's very much involved still in helping divest some of the investments that we have. And also playing the ambassadorial role, especially in terms of stakeholder engagement, which he has done very well over the last 40 years.
Thank you. Well, so I want to get into deep dive into what's happening with how COVID's affected your business and being a consumer business. I'm sure you see many things, what's happening to Malaysian society as well, and also your divestment plan, which I think you've announced something, right, in terms of a divestment plan and strategy going forward.
Yes.
Yeah, okay, we'll get into that as well. But before that, really, is how, and one of the big conglomerates of all time is someone like General Electric, right? And it was an industrial conglomerate, but it's a huge conglomerate. And at one point, it was the darling of the stock exchange, and then the US stock exchange, and now the share price has gone down. And it turns out that maybe everything which Jack Welch promised wasn't quite so true because of some funny accounting. But putting that aside, how do you see what do you see your role as running a conglomerate like this? Do you see yourself as a manager of each company? Do you see yourself as a capital allocator? Do you just make big capital decisions and rather than operational decisions? How do you see your role?
So currently, what Berjaya Corp is today, we are very much top down. And command control model. So we are essentially, we allocate capital, but we also kind of get involved in running the business. But moving forward, and I've been very clear with this with my colleagues as well, I showed them what the new Berjaya Corp will look like in 3 years' time, is that we'll be purely a capital allocator. So we're an investment holding company that would own 5 main sector groups, and each of those sector groups will then be responsible for their own strategic direction, for their own people strategy, their own funding, and our job is then to to get the dividends coming up from all these 5 divisions, and deciding where that 1 ringgit is going to go to be invested. Do we invest it in retail versus food? When do we take money off the table? Do we need to think about the 6th pillar of the business, and really moving that? So a lot of the transformation initiatives that we're doing now is really putting in that structure to prepare those groups to behave in that manner. And if we go down the path that we want to run the companies, to the point of what should be the merchandising mix in our retail versus what coffee roast we should be having in Starbucks, I think we're chasing down the wrong vision here. But I want to be an ultimate holding company, and be very strategic. One of the initiatives we're also doing is to clearly demarcate roles within the group about what is a strategic role that needs to be at the holding company level versus what needs to be an operating role and a day-to-day operations role that needs to go down at the company level. But the journey to get there would require us to put in several processes and do some legal entity rationalization as well before we can get there. And I reckon that's a process that we should be comfortably able to see over a 3-year period.
I mean, certainly that's the way people are. Well, I hate to say in theory, but how rational or logically one should approach a conglomerate, right? I mean, Berkshire Hathaway, I guess that's something similar to that, and all the large and successful conglomerates do that, where the guys in head office don't think they know how to run everything, but what they do is how to allocate capital and quiz people on whether they're getting the economic profits. Automate. So great, but I get the feeling though. I don't know Berjaya well, but I get the feeling Berjaya wasn't quite run like that before, though.
Absolutely not. Absolutely not. First of all was the focus, right? Really, what is it that you're going to invest in? You can't be looking at every single deal that comes that lands on your desk. So that was lacking. That whole focus aspect. And then once you buy, you do need to put in deliverables for the company, right? For me, we're now working on a corporate scorecard for each of the companies and a KPI, and really tell them that, look, this is the box that you need to operate within these parameters. By the end of the day, this is what I want you to deliver with revenue, margins, and whatnot, and also pay me dividends. And I want a recurring income at the B Corp level, so that we do have money, so we don't rely on ad hoc kind of thing. Currently, but being very honest, some of the initiatives are a bit more ad hoc and reactive rather than proactive. So we're really putting in a much more structured thinking that, how would the future of hospitality look like, right? Are we even equipped for how the future would look like after this whole thing eases? How do we adapt technology within our retail stores, for example? Maybe 5 years ago, digital was a nice to have. Today, it's a must have. We've rejigged our management team as well to be a lot more strategic and thinking about how do we give these companies the required independence and accountability and empowerment, but have an oversight from the ultimate holding company, which is the B Corp level. And so it wasn't run that way. I think the biggest gap, I would say, would be on the performance monitoring and measurement. It's about really being able to kind of have that conversation in a regular basis with the companies to say, where are you now? In terms of your operating performance. Do we need to pivot? Are you on track? Are you not on track? What's wrong? And what do we need to do differently? That conversation was a bit ad hoc in the past, and now it's a lot more regular by way of having an exco, which I chair now on a monthly basis.
So, very much kind of fund manager, asset allocator,
yes.
all overview, and we want to get to that. So it's amazing. Just looking at the Berjaya Corp website, right? It's got nine 10 things. Consumer, property, hotels, resorts, gaming and lottery, financial services, food and beverage, education, environmental, motor trading, and other businesses. So 10. So I mean, to get a handle of that is a big deal. So maybe and we talked a little bit about how how the pandemic and digital has affected the businesses. I mean, you're directly in the front line in terms of being the consumer sector, right? You've got pharmacies where people want to buy medicine, more luxury consumer staples where Starbucks coffee is something luxury item, and some things which people need to do all the time. So how have you coped? How has COVID how has the pandemic affected you?
Yeah, so it's been varied, but we are hit. I say we're one of probably the few companies in the country that have a touch point with every segment of the society, right? Whether it's the lower end of the society or the higher end of the segment, we are there in some way, services or goods. Our retail sector continues doing okay, but there is a bit of a fall because we do rely a lot on people who come in physically into the stores to buy things. And then our food was doing okay before this latest round of lockdown, because we do still rely on a lot of people coming in, doing that impulse purchase, sitting down, having coffee. But we've also ramped up delivery. There's been a huge change in the way we run the food business today. Before the first lockdown, March last year, we started going big in the drive-through category, and that's where we've seen a lot of our biggest growth in the Starbucks, by also putting together all our food brands under one roof in a drive-through, where we can get economies of scale. And that continues doing quite well, and that's something that we will continue rolling out. The growth outside of Klang Valley also has helped the food business. Real estate is obviously very slow. We've put a stop and deferred a lot of our launches because the time is just not right for us to do anything there. So we've taken this kind of idle time to kind of have a rethink about what are the developments that we should be doing. Are we doing it right? How is demand of property going to look like? There is a big rethink about having a lot of commercial, especially retail sort of exposure, because I think that is going to change massively after this pandemic. Hospitality, need not say more. It's badly affected. The ones that's recovered very quickly for us is in Iceland. Unknowns to many people, we are the largest hotel owner in Iceland. We own 1,800 keys.
The biggest hotel player in Iceland.
So it's an interesting story, a quick one. The hotel was owned by Iceland Air, actually, by the national airline. So when they were having financial difficulties, they were looking to divest their hotels, and we went in and bought. Initially a 75% stake, which we then increased to 100. So that gave us 14 hotels, 1,800 keys. We are the largest hotel owner in Iceland today. It's a very profitable business. We used to run at about 87% average occupancy pre-COVID. And now that's bounced back very quickly because Iceland is now fully open for business, no quarantine required, and a lot of European tourists are coming back. And I think as of last weekend, our numbers there was about mid-70s in terms of occupancy. So a bit of light at the end of the tunnel for the hospitality division for us overseas. And also, I think it also shows that diversifying that geographically did help. And then we've got services. Services, we've kind of broken it down really under 3. You mentioned just now about 10 things on our website. We've not really updated the website yet, but that 10 is now 5. And within services, we do have the big one, which is our big dividend contributor, which is the gaming division, which we've had for a long time, nearly 40 years. And then we've got digital, where we have now created a new entity called B Digital, which now houses 3 of our main digital companies. We've got a data analytics company that does a lot of work for FMCG companies in terms of sorting out data, doing the data analysis, artificial intelligence, and doing all that funky stuff. We've got another company, obviously Razer FinTech, where we own a 49% stake. And then we own Be Infinite, which is a e-wallet company. We've put all that under one holding company so that I wanted to ring fence the digital companies away because they behave in a very different way. They need different kind of funding. They attract different kind of people. So I didn't want them to be bogged down by the bigger group, and we ring fence them. The other one is environment. That's a very interesting business we have. It's called Enviro Park. They do landfill waste management, water treatment. We have a big business landfill in Bukit Taga here in Malaysia, and also in Pampanga in Philippines, where we have a 25-year concession for a landfill. That's in a very nice, sustainable space, and I want to continue growing that. It's a very profitable company. We always get inquiries about that company. I always make it clear, no, we're not interested to sell it, not at this point in time. Yeah. So I think there are pockets of things that do continue doing well. I think digital is doing okay. Environment does okay. Gaming is very affected because it is a highly regulated business. And because the outlets remain closed, people cannot go and do what they do. Hospitality is weak. Real estate is weak. Food is okay. But weaker than what it would be, and retail is somewhat neutral.
Okay, yeah. Interesting. So, I mean, compared to Philippines, for example, where you also have many businesses. I mean, would you say the Malaysian consumer is better off, worse off, the same as the Philippine consumer? Or?
Yeah, it's hard to say because our business in Philippines, although it's diversified, is not as entrenched as it is here in Malaysia. So in Philippines, we've got a small food business. We have the Papa John's franchise there. We've got about 30 outlets there. It's profitable, makes slightly over $1 million profit. We've got a minority stake in the Mazda car distribution together with Bermas there. The biggest one is the landfill business, and we've got a small gaming business where we manage the lottery business on behalf of the government there. We are seeing weak sentiments in Philippines with the car business. Not many people are buying cars. The food business is still okay. We've not seen too much of a drop there because it's in a certain segment which is a bit more, I guess, protected from the problems that are happening today. And then the gaming business is somewhat affected as well. So I think we feel it more in Malaysia simply because a large chunk of our revenue does come from Malaysia, and then we feel it more when people are locked in. So I think every country has managed this pandemic in different ways, and I'll be very hard pressed to say who has done a fabulous job. So I think we just have to wing it through.
Okay, thank you. So, MIDF Group, the report is saying that the sales of instant noodles has gone up a lot, simply because people, that's the cheapest thing for people to buy. Do you see that kind of change in consumer behavior among the items you have?
Yeah, so we're seeing smaller ticket sizes coming in. People who used to buy, say, 100 ringgit of things are now probably spending half of that. They're coming in a bit more regularly, but if you look at the total basket size on a monthly basis, it's gotten a lot more smaller. And then if you kind of analyze exactly what you're buying in that basket, I think there is an element of price consciousness as well, that they're holding back on the nice to haves and just focusing on the must haves. I guess we don't run a supermarket chain or anything, but I mean, when we look at, say, a 7-Eleven or a Causeway and everything, we are seeing ticket sizes getting a lot more smaller. And then we look at our food business as well. People are ordering, but maybe ordering a bit more smaller. There is a lot more emphasis on promotions and that sort of thing. So yes, we are seeing that, definitely.
Okay. Gosh. But you know, you sell Starbucks, and nobody needs a Starbucks, right? Nobody needs a $10 cup of coffee or a $15 iced latte, frappuccino, whatever, frappo. But how's sales there? People are still buying Starbucks?
Yeah, don't jinx it. You know, it's doing very well.
sorry. But people like
no,
Starbucks.
yeah. So I think Starbucks is beyond just a product. You know, it's very much a lifestyle
Right.
thing. And you know, when we first started pushing out deliveries in a big way, we were surprised. You know that you know, people are still consuming it and still continue consuming it. You know, sales overall obviously has fallen because you know, it's a different psyche and mindset. You know, people ordering online versus going. When you go, you tend to do impulse things by just taking things off and buying it, right? And it's the same when you shop in a supermarket physically versus doing it online. So that's fallen. But you know, Starbucks, obviously, given its price range, it does kind of cater for a certain segment of the market, and that market continues doing okay. But I think our whole positioning around Starbucks, and I remember as a fund manager coming and seeing Berjaya Food, you know, several years ago, and I asked this question: what would be the saturation rate of your outlets? And I remember it was about 300 stores at that point in time. Today we've got about 322 stores, and wow. how did that come about, right? It's because of the change in concept, right? I think in the past we used to be very chock-a-block, 3,000 square feet in a mall fronting the ground floor, but today now we do drive-throughs, you know, where sales are a lot more, and a lot of our growth is also coming out from Klang Valley actually. You know, it's always a myth that, you know, once you go out of Klang Valley, you know, people don't really have money to spend. It's not really true. Sometimes I think it's the reverse, because there's probably lack of an avenue to spend that money. But we are conscious that you know, the longer this economic drag it is a concern for us, right? You know, because we can't be just saying, oh, it's all doing well. It's falling, but at a certain time, people's reserves also would diminish, and that's what worries us longer term. You know, when do we see an exit from this? Hence why, you know, I've been quite on the record by saying that, you know, we need a firm exit strategy from this pandemic, right? And just need to have a bit of light at the end of the tunnel to know exactly when are we going there and how is it going to look like, so that we can plan the businesses better. We have factored in for our hospitality business that we're not going to see any sort of inbound travel from overseas until at least middle of next year. You know, so at least inbound. And I think I'm being very conservative about that and taking a lot more of a pessimistic view on it, because at this time typically our resort in Terengganu, Redang, would be jam-packed, 100% occupancy, because we rely on the European tourists to come in. Today it's empty, and you know, it's very painful for us, and the management, we still need to keep it maintained, and the cost of maintaining it is quite heavy. But
you haven't. I see. So you're mothballing in a sense of these hotels, waiting for a time to reopen.
Yeah. So also, hence why we've also announced, you know, in the hotels that we also need to divest some of our assets, right? You know, Iceland continues doing quite well. We've got 2 hotels in London, which is doing okay. You know, again, because London will be reopening this weekend and going back to normal, and inter-European travel is doing quite okay. So London should continue doing well. But we do have 2 resorts in Seychelles. You know, it's about 22 years old. We've got a resort in Sri Lanka. We've got the Sheraton in Hanoi, and also another one in Philippines. We've put those properties up for sale. I think from a geographical perspective, we felt that we were no longer competitive there. When we came in, it was 20 years ago, especially in places like Seychelles and Sri Lanka, where we didn't have competition, so we did quite well. The cost of investment has been paid multiple times, so we've made very, very decent economic returns on it. But the question now is that, place like Seychelles, every single 5-star operator is already operating there. And for us to get our average daily room rate up to that level, we do need to invest. That's the capital allocation decision now. Do I really want to putting in $1 there, or do I want to be putting it elsewhere? I've also announced that our hospitality division will move into an owner-operator model, model rather than an operator model. So today we own hotels, we also run it under the Berjaya brands. But over time, that will no longer exist, where we will just become purely owners. Like how we've done with the Four Seasons in Kyoto, for example, where we own the property, but we get an international operator to come in. Right? I think that was part of our assessment to say that in the past we wanted to do everything, and now I think that thinking has changed, that we probably need to bring in expert operators to help run our hotel. So we like Japan. Japan has been a good hospitality market for us. And it's one of the few countries in the world where, we get global tourism coming in. We get people willing to pay, $800, $1,000 for a night in very high-end luxury hotels. And also the cuisine, right? We still have people who want to pay a good amount of money for an omakase meal. There's very few countries in the world that has that sort of star appeal. And also, I think over the years, and this is learnings from us, from bad experiences, that if we want to do something in the hospitality industry, which involves, owning a building and having land issues, we want to do it in a country which is a developed country with a right regulatory structure and legal infrastructure and rule of law as well. And I think that's perhaps maybe I think some of our learnings, having operated in China and Vietnam, where we are slowly exiting whatever little that we have in there, to then maybe focus on the 5-star business in places like Japan. Yeah. Wow. So the idea is that over longer term is that our hospitality industry, I would love to have a hospitality REIT, a real estate investment trust, which owns just 5-star hotels, not operated by us, just owned by us.
Wow, that's quite counterintuitive actually for Malaysians to invest in the most advanced and most expensive markets rather than traditionally, Malaysians invest in the least advanced and cheapest markets. But that's good.
Yeah, I think we've done that. We've done that, going and investing in places like Sri Lanka and Seychelles, and nothing wrong. We've made, very good, well. Decent. We've done very well there. But I think longer term is that the hospitality industry is a very brand conscious industry. You can have two identical real estate, and then you just take the name away and put a Four Seasons and another brand there, and you get different pricing, right? Yeah. And everything else can be the same. But people have this mindset that when they see a certain name, they expect a certain standard and the willingness to pay for that, right? And these people got to that sort of branding by investing a lot of money. So I think the best strategy would be just to partner up with that rather than us trying to be one of them.
Okay. Yeah. I mean, that's certainly a strategy which we hope. Well, I hope for you. We'll hope for Berjaya Corp turns out. Yeah. It turns out well. I mean, it is one. Okay. You own all these luxury brands. So you own HR Owen, which if you.
Yes.
My student days in London. Well, actually, any days in London, you walk past the showroom and you just stop and gawk at all the fancy cars there. I take it that fancy car sales are doing very well. Right? Rich people are no problem in buying COVID.
It is doing very well. We domestically, about a month ago, we sold our Peugeot distribution business, and that was the start of us exiting the motor distribution business completely. But we will keep HR Owen. HR Owen is a luxury car segment. It is a bit what I call recession proof, because we sell 7 luxury brands there: Rolls-Royce, Ferrari, Aston Martin, Maserati, Bugatti.
Every boy's dream car.
So yeah, I do live that dream a bit, because I get to be involved in that car business. And our margins there, it's not a mass motor distribution business where margins are typically quite small, between 2 to 3%. But at HR Owen, it can go up to 4 or 5 times of that, because there's an element of customization we make for those cars. Our clientele is rather quite interesting there. It's a lot of royalties, a lot of footballers. Some of the most prominent footballers in the world are our regular customers there. That has HR Owen has had a record year this year during the pandemic. I think people will be. I think there's a certain segment of the people twiddling their thumb during the lockdown and not knowing really what to do, and decide to plonk their money into a car business. And a lot of the cars that we do sell also are in that using a term FOMO, fear of missing out, because they don't make tens of thousands of cars. When Ferrari launches a new model, they're only going to launch 500 units. So there's an element of people trying to get their hands on the unit and everything, and that drives that sort of exclusivity. That business does very well. I think one of the challenges in that business is obviously the real estate costs. And you can't run a luxury car business by having your showroom in a dark, dingy alley. You need to have it in Mayfair. So the cost of real estate there is pretty high, and there's about probably 3 landlords in the whole of Mayfair, and we're not one of them. So we are susceptible to a higher rent price. But it's a very interesting business. It's also from a wider business perspective has given us a great advantage. We are a lot of our clients have gone on to become business partners as well for us. So it continues being quite useful from a network perspective. Now, one question I always get is that an extension to that, would the football clubs come under Berjaya Corp? I've been very clear, no, it won't come under Berjaya Corp. So it's still held privately by Tanjivin. 3 clubs: Cardiff, Sarajevo, and Quartic in Belgium. I sit on the boards as a. This
is a dream job, isn't it? You sit on football clubs, you go and play with Ferraris.
Yeah, I've not really been able to go yet, but it is. I guess when people ask why I took on this job, one, it was a nice challenge to do. Secondly, it was also very interesting businesses that I truly believed in. Retail, food, cars, and to a lesser extent, obviously football, because it's out of the group. But I do sit on the board, so it's been interesting. Being able to do things that I enjoy doing. Yeah.
Great. Okay, we have tons of questions on the Q&A chat group. So I'll start with the first one. How is the stage of what stage is B Corp at collecting back its proceeds from the Great Mall China court case?
Yeah, it's coming along. We've not collected everything entirely. This is China, so things don't really happen overnight. It is a process. We've won the case, so I reckon that will be about 12 months down the road before we collect stuff. We've got a dedicated team set up to kind of facilitate that. And once that is all collected, we will wind down our operations in China and do a complete exit. The only other thing we have in China is our Causeway business. And since I came on board, I've taken over as chairman of Causeway, and we've decided to close down all our overseas operations. China is currently in the process of being closed down. So by end of the year, we will exit that.
So B Corp's going to exit China?
Yeah, we will exit China. We don't have much to begin with right now. We've been slowly exiting over the years. Whatever that we have now is just cleaning up whatever that we have and collecting these proceeds and all that. I think also let's be real about this. How many people have actually gone into China and said, "Wonderful, I made a lot of money," right? It's never going to be the case. Like most governments of large economy, they do tend to get a bit more nationalistic on that. We've tried various businesses there, and I think we've made that firm decision that we will exit.
Okay, good, thank you. Next question is on the tracts of land you own in some clubs. I guess you're taking things like the Kiara Equestrian Club, that kind of land. Are you going to plan any development plans for these?
Yeah, so So under our hospitality, the two big ones are hotels and resorts. The other one is the recreational clubs. And some of our recreational clubs do sit on very prime real estate. One is Bukit Kiara, another one is Club Darul Ihsan, and also Bukit Jalil. Those have been earmarked for development. We have a development plan in mind. We know what the GDV is going to be there. It will be redeveloped. And realistically, the economics on clubs, recreational clubs, isn't really there. It is over the years. I think it was more of a lifestyle thing, and now it's morphed. So I think we will redevelop that. We will still keep some of our recreational clubs outside in the not so prime areas, but yeah, we will redevelop that. A lot of our land value that is trapped in B land on the property division is coming from the redevelopment of these prime land. In Kiara, we've got a decent amount of land there where the current club and equestrian club sits, and Bukit Jalil and KDE as
well. Fantastic. Next question is, what would you describe as Berjaya's main strengths currently before the restructuring?
We're very operationally strong in some of the key segments, right? But I think, and that's something that I want to continue running. I have no issues about how the business is run from a day-to-day basis. I think we've kind of mastered that and done very well. But I think what we need to work on is the strategic aspect, right? About where do we want to invest $1 versus when do we stop investing? It's that strategic focus that I have spent a lot of time working on. So operationally is quite strong. I do think that we do have a good eye for deals, our ability to kind of go out there and do deals. And Tanjivin always says this, that when he bought Starbucks, people were like saying, "Are you crazy? No one's going to spend 10 ringgit on a cup of coffee." The business continues doing quite well, and I think we are in the top 5 of Starbucks Asia Pac right now in terms of operational efficiency and sales growth and everything. So I think those are things that over the years we've gotten very good at. I think operationally running the business, but it's just about like what's next. And how would retail look like in 10 years? How would food look like in the next 5 years? I think those are the bigger things that we need to work on.
Yeah, big questions actually, and especially how the pandemic has changed
a lot of things.
Yeah. And I don't know whether it's a permanent change or will it just a temporary change. Well, I guess we'll find out.
Well, I think for us, I think permanent change would rather come from the way our outlets are. I think the days of big malls would probably be over. I think retail. I think physical shops will still exist, but these large mega malls and everything, I'm not too convinced that it will still be very popular, so which is why on our real estate side, we've had to kind of tweak, we never had plans to build any large malls anyway, but, we had to really retweak our offering in the retail space and commercial, really saying that, would there be demand for these sort of things? And that's why we've taken this kind of downtime in the real estate to kind of have a complete rethink about offerings.
It's not great news for commercial real estate in Malaysia. What's your view on office hours? Do you think that's going to be permanent as well? People won't go to work so much, won't go to the office so much?
Well, I think I feel the best way would be a hybrid structure. I don't think you can just tell everyone to work from home and everything. I personally, I enjoy the flexibility. But I still like coming into work. And we do have oversupply situation in KL, and there's a lot of things which would influence that. As companies ramp up digitization, which they are doing during this pandemic, you realize that hey, I can put things on the cloud, for example. I don't need a server room, and that saves a tremendous amount of real estate space. Just where we are, for example, as we now are ramping up on digitization, I've saved nearly about 20,000 square feet of space. I don't need to have storage space. I don't need to have the server room and all that. And I can redeploy that space. But if you are in the business of kind of leasing spaces, I think you're going to see as tenants start renewing their contracts. We've seen that in Singapore, for example. Banks are giving up 2, 3, 4 floors and saying, well, we don't really need so many people. So I think there will be a change in demand. I think there'll still be a demand in very good quality buildings. If you're grade A and providing certain level of services that is very different, I think there will be demand. But I think lower down that category, where there's a bit too much commonality and similarities, I think there will be some strain there, is what I feel. We don't have too much in buildings, and our buildings probably need, to be honest, a lot of work. It's quite dated. A lot of our group of companies are in there, but we are also doing a rethink about what we're going to do with that longer term.
Thank you. And we were supposed to end at 1:15, but I think we'll carry on to 1:30. There's so many questions.
Yeah, no problem.
We'll carry on, if that's okay. The next question was 10,000 acres in Bukit Tinggi. Have you answered that question? Or?
No, not yet.
Okay.
Yeah, we've got
10,000.
Yeah, so Bukit Tinggi, we've got a lot of land. I mean, obviously, when we acquired it was going to be like, rival to Genting Highlands and everything. Obviously, we don't have a casino there, but it's a lovely piece of land, and I think maybe the whole master development around it was not the best way. We currently have a dedicated team now looking at what we can do there, and that includes also an operating model shift. We do have 2 hotels there, and one is a wellness hotel that could do a bit more, and we're thinking about expanding its services and bringing an external operator, and we're thinking about doing a township there and putting other facilities there as well. So we will redevelop that, but it'll be slowly. It's lovely. The climate is nice. I think there is a certain segment of the market that would appeal to that. But that's part of our longer term development plans there.
Okay, thank you. And Kyoto and Okinawa, are you doing property development there as well? How's that going?
Kyoto, we have the Four Seasons there. And we have still several unsold units in the Four Seasons residences, and I think we should be able to wrap that up perhaps by the end of the year. And then we are working towards building a Four Seasons in Okinawa. Obviously the relationship with Four Seasons is pretty good. After Kyoto, we were very happy with it. They were very happy with us. They then invited us if we were keen to do another development in Japan. We like Japan as a country, to my earlier point. So yes, we are currently doing earthwork in Okinawa, that we will have another Four Seasons there.
How much is a Kyoto Four Seasons residence? $10 million US?
5,000 US per square foot. Yeah.
Wow.
Yeah, well, I'll be delighted to have a conversation with you after this call, Sharad. Yeah. Old time's sake. Yeah.
The special price, 4,000 US dollars.
4899.
Yeah, 4899. Thank you. Sustainability, is that big? Is it part of your plans?
Yeah, it is. Like digitization, I say sustainability is a must-have right now. If you don't do it, your shareholders demand it. But I want to be quite careful here, as we go about doing the sustainability framework. I told my team, I don't want a greenwashing. I think it's very easy to get into a trap of saying, oh, let's start signing all these treaties and being green and whatnot. But I want to do it properly. I want to do it in a way that, colleagues kind of live by it rather than just being another fancy slogan. Again, coming from a holding company point of view is that I think what we're doing now is looking at what each of our operating entities do. For example, on the hospitality, they do a number of good stuff on the E and the S. For example, we support the local community through a lot of social work. We do a lot of stuff on the environment stuff. And then on the food as well, we do a lot of sustainability and environment. It's really kind of binding all this together and then bringing it at the B Corp level. Right? So I want an overarching sustainability policy that we can then, that acts as a framework for these companies to do. Not really us telling exactly this is what your environment policy should be, this is what your social policy should be, because again, we've got very diverse businesses in multiple geographies. So there's a need for us to adapt and do things a lot more differently depending on where we are. Right. But it is a big push, and we will announce something by the end of the year about what we have in mind.
Okay, next question is from Nani from the Malaysian Reserve. One is, can you update on U Mobile IPO? And two, as Mr. Jalil has unveiled a 3-year strategic plan to streamline our existing operations, what does this mean for Berjaya Land, and what is Berjaya's plans for affordable housing? And perhaps maybe to that is Tekin Diang's got 2 questions: timeline to privatize Berjaya Land and timeline to dispose Toto.
Yeah, so U Mobile is not really under B Corp, it's under Tanjivin personally, but I think there will be an exercise there that would be done perhaps by maybe first quarter of next year or middle of next year. Don't know. I think timeline is quite fluid on that. I think one thing to note is that Tanjivin is not the major shareholder there. There are other major shareholders there, Temasek being the largest one. So it's not really something that we can decide. We do need the major shareholder to decide as well. So, I think if you ask us, as soon as possible, but we do have to speak to the major shareholder first. In terms of Berjaya Land, affordable housing, yeah. So affordable housing is something that we will do as part of our commitment as a property developer. And given that we do have a lot of land as well, and all property developers need to build affordable housing, we're no different. I think one thing that we want to do is to kind of change the whole connotation around affordable housing, right? If you look at it today, affordable housing is a problem anywhere in the world. And I think the only country that's probably addressed this properly is probably Singapore via HDB, who have done it quite well. And it's been a successful model. Affordability, I guess, from a Singaporean perspective, it's another question. But we wanted to change the whole taboo about affordable housing. Today, if you say affordable housing, everyone say, oh, I don't want to live next to it. My property value will go down. But we wanted to kind of change that from a look, from a design, to be able to kind of blend that into the wider development. And a lot of thinking has to go on to that, from a design perspective, from a maintenance perspective, and all that. We have identified a piece of land that we want to kind of put in place the plans that we have for how affordable housing should look like. We're currently working with the state government to kind of get approvals on that, and then we will build that. It won't be many units, because it's a small piece of land. But in order to make this successful, we do need to work with the state governments, because it's pointless for you to build affordable housing 3 hours away from town, for example, just because it's cheap. Because then it defeats the purpose of people coming into town and spending a lot of money. So you do want to build it next to public transportation. You want to build it, closer to town. And that's where the government and the federal agencies and state agencies have land. So I think the best way there is to do a joint venture where they own the land and we can build, and then we share the upside. The margins are super small in this, but it's a volume game. But it's something that we feel from a social aspect, and again, to the question of sustainability and ESG, is I think that's where we can play a huge role, and maybe changing the whole mindset and connotation around it. At the same time, doing what we do, which is property development. Timeline to privatize Berjaya Land, I don't know. It's an element of funding as well. it will cost money to take the stock off the market, and whether that money is best spent taking the stock off the market or spending it elsewhere, that's the difficult decision I have to make. But Berjaya Land, as many would know, it has owns a lot of other companies in there. They own Toto owns Philippines owns HRON and everything. The common grounds I get from investors is that the company is not clear cut. If I'm buying this, why am I getting a car company? All that sort of thing. So in order to clean that up, a legal entity rationalization has to be done. And perhaps the best way would be to take it private and clean it up and relist it later. I want to do it sooner rather than later, but there is a link towards when things would get better, because when things get better, my cash flow commitment towards funding other businesses will lessen, and that would give me a bit more firepower to do something else. But for the time being, I do need to kind of balance that for now. So hopefully this pandemic won't prolong so much that we would be out of it over the next 6 months or so. Toto, I don't know, it's not a business where you have 100 people rushing through the door every day wanting to buy. But I said that every company is available for sale for a price, and that's really how we should operate. There's no emotional attachments, there's no sacred cows. And as an investment holding company, that's where we're going to get our alpha by kind of divesting our business. It is a very regulated business, and also, my preference is to be in businesses which are not too regulated. I don't want to put a timeline, because that would mean that we would we just want to kind of focus on a timeline and sell at any price. I have a price in mind, and when we hit that price, we would sell it. So it's and also, to be fair, I'm not too much in a rush because it does give me good dividends. So I do need to balance it out. Until such time I'm quite comfortable with the dividends coming from all the other parts of the business, then maybe I can expedite that. It is definitely in mind, but I don't want to put a timeline on it.
Thank you. And final question, we're really running out of time, is you said on BFM that the share price is somewhere between 5 and 10 ringgit. So could you please elaborate on that? And any final words for everyone who's been tuning in, listening to you?
Yeah. So if you look at the trap value, it's a lot of it is actually in land. We've got the Kiara land, we've got the Bukit Jalil land, we've got KDE, and one land which has never been spoken about is Selangor Turf Club, right? I think if people go back and Google, they would know why there's been a delay there. But that's massive amounts of GDV over obviously a longer period of time, about 12 years or so. But the profits there is very exciting for us. So over a longer period, if even I take a very conservative estimate and then do your normal analyst kind of RNAV or so, it is worth a lot of money. So that's where a lot of the trap value is coming. I think a lot of the smaller divestments that we're doing, closing, motor distribution or education or doing all that sort of things, it's really to kind of make the group a lot more neater, and also to cut off the cash flow, the need for us to kind of spend a lot of money on cash flow. But the one that will move the needle significantly is things like developing our land bank over a longer period of time. And so that's very exciting, but that's not going to happen overnight. There is a lot of factors that need to jive in. The timing must be right, and also it will probably take about 12 years or so. But definitely, the group is undervalued, right? Yeah.
Wow, thank you so much for coming on and having this conversation. I think I really enjoyed it, and I think everybody who's on the call also enjoyed it. We've got over 400 people listening to you, over 450 actually. So I'm sure they've had a great time. So thank you again, and all the very, very best to you and Berjaya.
Thank you.
So, thank you.
Thank you for having me on the show.
Absolutely. Thank you. safe. Stay safe, and yeah, have a good day ahead. Bye.
Thank you.